All right, my beautiful people, we are starting the filings. Now, I'm going to give you the disclaimer right now. We're not going to go in depth. I'm not going to teach you how to read balance sheets and go over that. However, I want to start with just literally the basics of where do we start with looking at a financial statement or any of these filings and what you're looking for and getting to the interpretation and understanding value. And now there's two things of reading and understanding the numbers and seeing, okay, what's good and bad, what's important for a company. But then the next level, this is where a lot of the earnings, it confuses a lot of people. It's how other investors are looking at it. We're going to see the highlights and understanding what you need to be watching, because at the end of the day, with earnings, and this is separate from just financials in general, but with earnings, you could see it in the market. The numbers will be one thing, but the market could react. It's all about how other people interpret it. That's just how the market and trade works. So to get into that, make sure you guys check the description in the bio for the live streaming channel. We're going to be streaming tomorrow, or no, Monday. So be there. And yeah, so I have two examples here that I'm going to be looking at to start with it. And if you guys have never opened a filing or don't know what it is, how to reach there, you go to NASDAQ.com and just simply enter NASDAQ.com, and simply you could enter in any ticker up here, any symbol, and then go over here to the left, you'll see SEC filings. Now, there's a few. It's to get to these ones, Roku. I'm going to use the examples of Roku and Kraft. And, if you guys saw my other videos, I like Kraft, and that's an interesting one. And as we go through, you guys are going to see. And even I have, like I said, my job, I'm going to show you how I'm interpreting and what investors are doing and literally where to start with this. But I have a few definitions with the Investopedia links for you guys to look up, because, and we could talk about this on stream, because this is stuff that you develop the process of learning how to read these and understand them and see their role with picking your stocks and making your investment. This is literally, the first step of analyzing a stock on a fundamental level, or at least understanding about the business and even the market dynamics, right? So again, the two examples, Kraft Heinz and Roku, I'm using them. They just reported, and you'll notice their 8K is the filing form I used to get to both of them, because eventually they're going to file, I believe both of them filed their quarterly and yearly. So you're going to see them file a 10K. 10K is the yearly statement, 10Q is the quarterly. We're going to talk, I'll make another video specifically on the filings and getting to these, but here it is. And you're going to see both, it's literally saying fellow shareholders, blah, blah, blah. And before we start with that, how I read any of these, when you open any of these filings, any earnings, the mindset I put myself in is understand it's literally a story. All it is, it's confusing. There's a lot of text, and a lot of people, this is the question I'm trying to answer with this video. What do you look for? Where do you start? You read one of these, every company is very, very individual, and investors are focused on a certain thing. Thankfully, the companies are aware of that, and they give it to you in that information. Then they give all the details. So it's easy. Like a lot of this basic stuff, that's not important. This is just all generic stuff. Item 2, it's saying what's contained in this document. But here, look for the headlines, the bold. Kraft Heinz reports fourth quarter and full year 2018 results. Now, again, the mindset I put myself into, I don't think I just said it, but it's a story. This is literally, they explain it very straightforward. If you guys have been on the streams where we've done a conference call and listened to it, they're kind of explaining it, and they highlight certain things, and there's numbers, and that's where we're going to start with understanding, this is some accounting stuff, right? But it's how do you understand this in terms of value and what made the stocks do what? And again, look at Roku. This thing went up 12% off of that earnings, and KHC, Kraft, it dropped, what's the percentage on that? 27%. And it's because of these earnings, but what made, what about these numbers did that? So let's start with Kraft, and right off the bat, and why I have two examples, every company is different. You're going to see here, there's certain highlights that you're going to see with Kraft. Q4 net sales, organic sales, that's bold. They're highlighting that. They're highlighting the EPS, and really, that's all you're going to see through the earnings. They have different product segments, and that's something we're going to talk about, but clearly, the main thing they're highlighting is just sales and EPS, but think about what Kraft Heinz is as a company. And this is where the filings could tell you stuff. This is part of that interpretation and understanding, value stocks, growth stocks, and how investors are looking at it. Kraft is a company, you guys, they make cheese, hot dogs, and even then, like, think about Oscar Mayer hot dogs is a part of why they dropped. You could blame Oscar Mayer for that 27% decline, and I'll show you guys what I mean by that and how I came to that conclusion, but it's stated actually in this filing. But they aren't a company that has customers, compare, and that's why I'm saying we're going to look at Roku. Roku has customers. It's still growing. They spend money to make films. They're spending money to get more clients. Even if Roku lost money, think Netflix, think Amazon. Even if they lost money, people would say, well, they grew at this many people. If they could monetize it down the road, all is well. So, but at the same, that's not how Kraft works. If they're selling cheese and hot dogs and bread and whatever, ketchup, that's a pretty fixed industry. They're not spending too much money on research and development and saying they're putting ketchup on the cloud or whatever it may be. It's just a straight to consumer product. It's kind of like a commodity. So the only thing that really does matter here is their sales, their net sales, and EPS, the earnings per share, and the return for investors. So let's see, they're saying Q4 net sales increased about 0.1%, and organic net sales increased 2.4. Anytime you see this is like any, document. This is just the footnote. They explain it a little bit more, but we're going to get to, it even explains itself reading it. But the Kraft Heinz company, reported. And again, this is all stuff. It's just saying what happened, but they'll really give you a summary of the main parts. He said, so here, as you see, fourth quarter and full year. So one is Q4 and one is the yearly. So the yearly, again, 10K. The quarterly would be a 10Q. So financial results reflecting solid organic net sales growth in all segments that was more than offset by higher operating costs, as well as a non-cash impairment charges related to goodwill and intangible assets. So this is something big, and these are one of those definitions. So here on, you guys are going to see it, and it'll come up, but impairment is one of the things I want you guys to learn and understand, and how that relates to a company. Because yes, this is one of those accounting things. I'm not as concerned about it as I'm not here to calculate it, but I'm here to see. Sometimes you could see errors with, and literally they have even new rules when there's bad purchases or even misuse of funds with the company. They transfer that even over to the goodwill. So here's the definition. You guys could go through it, but essentially, I'll give you guys the basics of it as it is from Investopedia. An impairment charge is a relatively new term used to describe for writing off worthless goodwill. And again, goodwill is the next thing. And goodwill is something that even gets related to purchases, but how you could view it is literally the value of a company's brand name, solid consumer base, good customer relations, all that, and then even intellectual property. So with that being said, let's get back. Oh, wait, I didn't even get to the impairment part, but it's a write-off of those type of assets. And yeah, actually that's enough for you guys. You could read the description, but one thing that is now dangerous about this with impairment, even says it on the Investopedia, because you saw this during the Great Recession. Okay, I have to read it to you now. So it's saying these charges started making headlines in 2002 as companies adopted new accounting rules and disclosed huge goodwill write-offs. For example, AOL, SBC, and McDonald's, to resolve the misallocation of assets that occurred during the dot-com bubble. They again became prevalent during the Great Recession as the weak economy and faltering stock market forced more goodwill charge-offs and increased concerns about corporate balance sheets. So it's kind of reminiscent, and it makes sense with what we're going through. If you guys have saw my video comparing 2001 to now, this is a very negative sign in that sense, and that's why investors reacted negatively, because one, the corporate assets of the company took a huge hit, and that gets reflected. Part of it explains in that article how the part of the new rules with impairment, you have to write off segments that pretty much would affect investors. So they were attributing some of these assets as a direct benefit to shareholders. So if they ever write it off and it's, the shareholders also take a loss. And think about it. This is a solid company. That's a big change. And we're going to get to what these mean. But let's, again, reading the words in the text. But as you see, there's a lot to this, and we're only a few, we're one line in, right? But keep going. Our fourth quarter and full year 2018 result reflects our commitment to reestablish commercial growth of our iconic brands, turn around consumption trends in several key categories, and expand a new category in geographic white spaces. So they're saying what they've done and where they plan to go in a nutshell, but that doesn't mean it's the guidance, more or less. We're pleased those actions, the return on investments, and momentum built for 2019. However, profitability fell short of our expectations due to a combination of unanticipated cost inflation and lower than planned savings. Going forward, our global focus will remain on leveraging our in-house capabilities, developing our talented people, and top tier yada yada yada. So that didn't really give you much except for, hey, this is what we did good on, and they will explain what they did bad on, sometimes either bluntly or very rosy. So here's the main thing. And now, even if you just saw these numbers, this is how reading a filing, and again, it's giving you the highlights. It's getting there kind of in a sense. This is the type of company. There's not too many highlights to look for. It's getting straight into the numbers. So how you're looking at this for 3 months ending December 30th. So both 2018 and 2017. But what it means 3 months ended, saying a 3-month period that ended on December 29th. That's a quarter. So now they're giving you two things. This is why, and this is what you're looking for, is growth year over year, especially now with a company focused on growth. You want growth. And even then, something like 0.7%, 1% on 6 billion. And as you see, it says in millions. So it says 6,891. Add 6 more zeros, you get 6.8 because it's in millions and thousands. Again, hopefully you guys are familiar with that. If not, Investopedia on that too. But the whole point is how has it changed from last year? Now, sometimes it's small, and this is what investors care about. A lot of times, whether it's a growth company like this or a value, they want to make sure the net sales are at least staying the same to a degree, slightly increasing, and the EPS in return. And we're going to talk about that. But especially if the company is more oriented on growth, investors want to see this number increasing, and they want that rate because that's projecting, what the company will do and what it will be worth in the future. But in this case, so net sales from comparing that 3-month period ending the last Q4 of 2017, they made 6.844 billion. This one, they made 6.8. They had a 0.7% increase. But this is where Kraft really, it gets interesting. Operating income. So operating income, you guys are going to notice the difference between operating income, net income, and then EBITDA is one of those things that's going to come up. Operating income, and understand why they do this. This is, again, I'm not here to explain the accounting, but understand how to analyze it. Operating income is saying how much money you make, your total, it's your net profit. But again, you got to be careful using that word net profit, because it's net profit based on your operating activities. So if your company sells ketchup, all this, you know what I'm saying, and has all those segments, it's saying how much profit did they make off of, and how much income did they get off of doing that and making it off of just operating activities, the core main business function or functions. So that doesn't factor in now taxes. You could even make money by companies make money hedging. They could make investments. They could own another company that's bringing in money. Imagine if Kraft owned, let's say Kraft owned real estate. They had a real estate thing they bought, and I'm spitballing here, but that was making them all this money. They wouldn't report it as operating income. It would come into the net income, but not the operating, because that's not going to reflect how well they sell ketchup. It's not going to reflect how well they're selling the hot dogs or whatever the hell they make, right? So that's what operating income is. And now this is huge. This is, look at, you guys are seeing the stock drop by the end of this year. So they're saying, they sold $6.8 billion of goods. By the end of it, off of just selling those goods and services that they do, just mainly the goods, they walked away with $1.5 billion in operating income. So now, as you see here, that was 2017, but this year they literally lost. So if it's in parentheses, that's a loss now. They lost $14 billion. So that's what it's saying based off of operating. That means they were selling and selling, but ended up spending $14 billion more than they made. But now this is where that impairment comes from. The impairment charge is related to the goodwill, which they explain, because, and again, if any algo read this, or even if you look at this, you're like, something's wrong. And that's where you guys are able to see, but it's now what's happening. And like it even said, this, if other companies, this is what I'm going to start looking for. And this is how Filings even helped me with my analysis, right? As this starts to progress, it's going to get very interesting, because if other companies do this, I'm going to keep my eye out for it. But now net income, and now this is factoring in everything. And that net income is taking your taxes, every single thing you could think of, and you get your net income. So in this case, it's 12 billion. So they gained, 2 billion somewhere. And last year, you could see how they're working. It's clear, even last year, they made 1.5 off operations, but their net income was coming in at 8 billion. So they're making money from other segments or something. And that's something to see, how is this company doing? And if you even wanted to now separate, that's why they do this. If you want to separate, how does Kraft operate as a company that just makes money for shareholders? This is making money for shareholders. Your net income's going up. The company's making more money. We're not asking questions how they do it, but this is how we explore the filings, and we can figure that out. But if I wanted to analyze them on a catch-up making business type scale, I'm comparing the operating income, and that's going to be the main thing. So now EPS, diluted EPS, and adjusted EBITDA. EPS is earnings per share. You take net income. So let's say a company has 100 shares and the company makes $100 in net income. I'm being simple. If you divided all those earnings per share, you would get $1. Now, EPS will take me on a whole another tangent. We're going to get into that another time, but I'm trying to point out the main things to interpreting and saying, hey, this company, as their profitability and growth, this is even reading the earnings statement, EBITDA. You guys, there's another thing. This is earnings before interest, taxes, depreciation, and amortization. So again, this is to see how is the company doing on a company by company basis. So as you see here, their net income was 8 billion, but the earnings before interest, taxes, they made their money either by saving money on taxes or something, and this is how you could read these and get an idea. But the EPS, they reported a loss of $10 per share. That's why it went down, but I want to skip ahead and get to understanding what happened here with their business. It says net sales were 6.9 billion, up 0.7% versus the year ago period. So again, they said for us what was just there, including an unfavorable 2.2% percentage point impact from currency. So that's something good to note too, because they were subtracting part of it. So that is good that it's included. And like I'm saying, every company is different. So some companies will include currency adjusted, some won't, because they're saying, well, if the currency fluctuated a lot and they do a lot of business in China, they could have sold more units, but it could have ended up, showing the company is selling more and growing more. However, in this case, they included it. It might be something where they're not getting affected as much by that. So continuing, in a net 5% percentage point benefit from acquisition and divestitures. Organic net sales increased 2.4% versus the year ago period. Pricing was down 1.6 percentage points as increased promotional activity and pricing to reflect lower key commodity costs, particularly in the U.S., more than offset pricing and the thing where do they get into it? This is it. So, condiments and sauces. Get the sauce. During the fourth quarter, as part of the company's normal quarterly reporting procedures and planning processes, the company concluded that, based on several factors that developed during the fourth quarter, the fair values of certain goodwill and intangible assets were below their carrying amounts. As a result, the company recorded non-cash impairment charges of $15.4 billion to lower the carrying amount of goodwill in certain reporting units, primarily U.S. refrigerated and Canada retail, and certain intangible assets, primarily Kraft and Oscar Mayer trademarks. These charges resulted in a net loss attributable to common shareholders of $12.6 billion and a diluted loss per share of $10.34. So this was the big thing that dropped it. But again, as you see, they were saying at one point they were holding this amount of goodwill. They were reporting on their balance sheet $15 billion of assets because of goodwill. And goodwill is something you cannot touch, but they have a calculation for it, but they check on it, and they're saying, well, if they can't do the same math a year later to say, okay, well, your trademarks, this, your customer base, your rate of growth, and even what you paid for a certain asset, if it doesn't meet the test, they have to lower amount pretty much to a fair market value. And they're saying, in this case, it resulted in a loss of $12 billion in assets. And again, that gets reflected in the operating income. So that's part of those rules it was saying of where it gets reflected. But did they necessarily sell less? That's why now they give you your organic net sales. Kraft was growing, but this is a concern because now what does that mean for the future, the business itself, or even then how the company's literally just using investment funds is another question to ask, right? So that's where, it goes. And here you guys see, oh yeah, I have it for you, carrying value. and mark to market. These are the things I want to leave you guys with to study on it. But now let's quickly jump back to Roku now. So I'm starting here again, like I'm saying, this is an introduction and what? We're already 20 minutes in. So I want to give you guys somewhere to start where you could start applying this analysis, get down it. But usually once you start understanding this basis, just go through every filing. It's a storybook. You guys Google anything. Google every single thing you see and just go to Investopedia. It will explain a lot. You guys have questions, feel free to come here. But getting into this, they're doing the same thing. Like, you're starting here. They're saying, remember those items 1 and 2, just get used to this. Here's Roku. They don't have as much bold stuff, but they're saying, boom, fellow shareholders, 2018 was an excellent year for Roku. We recorded record results and solid progress towards our long-term video of powering every TV in the world. As more than 3 million U.S. households cut the cord, Roku added 8 million active accounts, increasing our total active accounts to more than 27 million at year end. We estimate nearly 1 in 5 have it now, While our growth has been impressive, we believe we're still beginning to capitalize on it. We expect to reach 1 billion in revenue by focusing on these key areas, increasing monetization, But let's go to the highlights. But even from this, we'll see total net revenue grew 45% year over year. So again, that's growth, and that's why people are liking it. But again, let's read through all of that. I get ahead of myself sometimes. Platform revenue increased 85% year over year. Gross profit was up 66% year over year. Roku added 7.8 million incremental active accounts in 2018 to reach 21 million at year end. Streaming hours increased by 9.2 billion hours. Average revenue per user and Roku monetized video ad impressions more than doubled. So I'm kind of skipping through this, but even as you see it, look how different this is than Kraft as a company now. And that's what I'm saying, interpreting the business, you're seeing the business model and understanding what's important to shareholders. Kraft, stuff like impairment, the asset values, the big EPS, even everything about this company, even if the yield and sales, as long as that's stable, that's what the investors are caring about. That's why it's highlighted, right? That's the only thing. They're not telling you customers on average, it's not like Oscar Mayer wieners are a huge growing product and it's growing like kids aren't eating hot dogs like they're smoking Juul pods and it's like 30-40% growth. So that's not a key highlight. But look at Roku. What are they highlighting for investors? How much they brought in revenue, right? Gross profit, but you'll notice operating income and organic sales, they're not putting that here. They're still in growth. But total net revenue, that's one thing they're doing. The platform revenue, so that's saying one is their net revenue from operations. That's why you're saying net revenue, not net income. But then platform revenue is how much they're making just from Roku itself and that use of that main platform they have. Gross profit, again, you're giving you profits, that's the same. But now look, how many accounts? They're saying how many accounts did they add in 2018 and how much, or in the last quarter, and how much did they have by the end of the year? How many people they're adding. Now that's different, but investors care about that. Streaming hours, how people are using it. So it's one thing to have people on your platform. Investors are smart now. We want to know, and investors, again, it doesn't matter what I want to know. This is clearly an important factor. And you see companies change this sometimes of what's important as the business model changes and earnings and as investors respond. But how much time on the platform, 9.2 hours and then to 24 billion. So they're saying it's increasing, meaning users have increased, but now people are watching the content more. That's part of their business and their core business. Average revenue per user. Again, you didn't see that on the other one, but increased $4 to 17.9. Dang, see, that's crazy. See, now that's awesome, because if that's the case of how much money they're making on that, and if they're growing at this pace, you could put this into a math program, Excel, and figure out what they're doing if they grow at a certain pace. And then that's why we want to look at, year after year after year and see, has this pace going up? You have a lot of data to predict, and this is how investors are figuring out value. Again, this is just basic stuff of understanding, but that's how you guys get into this. And, thank God for the internet and all the tools. But again, Roku, how they're making money, that's the last part. But again, I'm trying to show you guys the keys and the key differences that come up. So I think I'm going to leave it there for you guys because I don't want to overwhelm you guys. I want your feedback on this. What did you learn? What was new to you? What did you already know? And let's discuss this. I can make a follow-up hopefully by this weekend, but worst case scenario, we're going to go on the stream again. Go to the description and show me some love. I love you guys. Have a wonderful day.